Good afternoon, everyone. Gabe Velazquez here with you, Transparent Trading Solutions.com. Hope everybody had a good holiday, Father's Day, and all that. Let's go ahead and get started. Probably going to be a shorter show today. Not a lot really happening. I do have a class coming up the following Thursday. If you want any information on that, go ahead and hit the link below. It's going to be more about long-term nest egg. Actually, it's going to be in 4 pieces, talking about how to sell options on current positions, laddering T-bills, ETFs, long-term sector ETFs, and so forth. So I think it'd be interesting especially for those of you that have some retirement money coming into the summer and going into some of the worst months of the years, starting in August and September in the stock market. I do anticipate that we are going to have some turbulent times coming up here in, traditionally, again, as you know, August and September are some pretty rough months. So in any event, if you're interested in that, go ahead and hit the link below. We'll send you the information. I'll be tweeting about it. That's a week from this coming Thursday. Okay. All right. We did, as I mentioned on Friday, we did come in long S&P puts, SPY puts. We're doing okay with those. Market did attempt to sell off earlier this morning. As you know, we sold off on the S&P futures. We came, Friday, as you know, we had a bit of a pullback. Getting a little bit of follow through. S&P was down about 21. Didn't quite get up to our level, but I did buy the puts as we broke the lows on Friday. And so, 415 is the actual level I'm looking at to go short. But it looks like we have sold off, and we do have some pullback areas down around the 4360-ish area. There's a base rally, then there's a gap at 4,300. It's a rollover gap. So, if you are looking to get long this market, that's probably going to be your best bet on the S&P futures. That comes in around on the SPY. That corresponds to about 430, which is actually the target on the puts that we have currently right now. We also try to get into FedEx. I've been doing a lot of that earnings play. Didn't fill on those, and I'll review those with some this afternoon in the class I'm teaching this afternoon as well. So, but all in all, again, still a strong market. Even though we've had a pullback here of about, from peak to trough. We came right up against 4,500 on Friday on the S&P futures, 4,495-ish. Today's low was, about 80, 90 point pullback so far. Is that going to be enough to get this thing rolling back up again? Who knows? But very, very strong market. Still lots of momentum. We'll see. We got Powell speaking tomorrow. He's got that we used to call Humphrey Hawkins testimony tomorrow, and we'll see if the markets react to that. If he comes out really, really hawkish again, but we'll see how that goes. And then Thursday we have Bank of England with the British pound probably having some movement around that, and then we also have the Swiss bank coming out, so we may get some volatility there. Aside from that, really not a lot really changing in the bullish dynamic. The Nasdaq just barely pulled back. We're still seeing a lot of momentum, a lot of strength in the Nasdaq futures. 15,510 is a really nice looking level. If you're looking at Nasdaq futures, check it out. It's a daily level. It's a pretty broad level. It's almost 100 points wide. Actually more like 160 some odd points wide. So, I mean, but those are the levels right now on the Nasdaq, and it swings 200-300 points a day. So that may be something to consider. And then on the pullbacks, Similarly, you've got a base rally at 14,818 on the NASDAQ. So but that's a few hundred points away. For now, again, kind of commented on that. Actually, I've been writing on the newsletter. By the way, if you don't get my newsletter, you can also subscribe to that. It's free. I write it every weekend. You get it on a Sunday, kind of recapping. I do give you some trade ideas, by the way. It's not just, a bunch of, that's all I do. I talk about the markets and give you some trade ideas. I gave Nat Gas this weekend. So if you want to grab that and maybe you can make some money off that. Give you some general trade ideas to look at as well. So, the NASDAQ's still strong, very shallow pullbacks. Interesting, AMD did pull back pretty good today. Kind of a mixed bag. All the talk was like Apple, Apple making another all-time high. Now they're talking about a $1 trillion market cap, which is really pretty amazing. That it is, that's kind of what's driving the indexes again. Everything else was kind of a mixed bag today. Dow was down more than anything because of Disney and some other stocks, and then the Russell also was down. So generally, a down day, but very, very modest pullback, I would say, right? Nothing to, and again, we're in those puts. We still need, we can just, just a pullback down to 4,300 would be good. I don't know if we're even going to get that, but, we're up a little bit. We'll be managing that trade aggressively and go from there. And then on the futures, also looking to get long the Russell down around the 1,800 level as well. There's a nice little level you guys can see on your charts there, 4-hour charts. But other than that, again, getting into the summer, do we get the summer doldrums? There's two ways summers usually go, right? If you have been around the markets for any extended period of time, you usually get the summer doldrums on one hand, and or you get a ton of volatility, right? I'm going to lean more towards the ton of volatility just because we're, where we're coming from. We've had this massive rally, VIX at 14. Still a lot of uncertainty with the Fed meeting in July. We got Jackson Hole in August. So, there's still a lot of uncertainty out there, and the market tends to ignore it right now. You still have inflation elevated. You still have rates. One of the things that kind of segueing into the bond market, notice the bond market did rally today, but rates are kind of on, the 10-year in particular is barely hanging on to this 112.15 area that I've been talking about. If that breaks that low, that could be something that may put pressure on, particularly the NASDAQ or even stocks, because remember, stocks have ignored pretty much. We've had a massive bond rally and up and down all over the place. So bonds have been very whippy, very erratic type of trading. Other than the 30 years, actually, the 30 years settling into a very clean range. If you look at the 30-year, 126 to 128.13, it's pretty clean, pretty nice range. Looks like we want to break out above 128.13 could rally back up to 132, but that's the only on the bond side. That's the only market that really sees some clean levels as well. And then we did bounce off the 5-year. I think I mentioned the other day, 107.13. We did get a little bit of a bounce, but very, very choppy. And then the dollar also all over the place, kind of in no man's land. We did hold that 102 level that I've been writing about and talking about. But now we're kind of just, nowhere, and, attempted a bounce. And today was very kind of choppy trading. So a lot of choppy markets right now, all the way across the board here. Any currencies really worthy of mentioning? We're seeing the same kind of action in a lot of the currencies that's happening in the dollar. You get the, like, we had this nice rally in the currencies, and then because the dollar fell, and now that the dollar is trying to bounce, you get another pullback, no follow through. So it's been, you got to be super nimble with these things on the currency side. Comp dolls, the Aussie, the New Zealand have actually had some really nice movement there. So we'll see how that goes. And then nothing else really. The yen is also in a very tight range. Canadian had a really nice bounce off of that pivot low at 73.25, or the kind of a double bottom type of formation. And now we're again sitting on top of this 75.84. So again, very, you're getting some moves, but you got to catch them right, or else the train leaves the station. And then if you chase them, then obviously you're in trouble. So again, currencies have been a bit of a challenge. Nothing really to talk about in terms of the currency, in terms of the metals. As you know, I talked about this on Friday. Gold, just nothing, just chop, range, 1936 to 1990. If you want to trade inside that, that's really all you got. I'm not one to do that. So if you can catch the extremes on these little levels, these ranges, then obviously you're a better trader than I am. Really, right? If you can trade that successfully, you're a much better trader than I am. So I commend you for that if you're able to do that. Right? But I know how that pans out. I know how that plays out over the long term. I mean, really, nothing else really. Copper seems to be perking up a little bit. If it can break above $4, looks like we're getting close on copper. So that's starting to perk up a little bit. Oil also very similar, just chop. I would call it 75 down to 67. We're again kind of in the middle part of that range, and today was again a very choppy day. I wrote about this in my newsletter, the nat gas. We had a little pop in nat gas, and sure enough, came right up to 268, which is a very clear resistance level. And sure enough, it fell right back down again, and it looks like we're headed back down to now. If you're looking to buy nat gas, that 232 where it broke out from could be an area for you to look at, and pretty clean on a chart there. You can see the 1, 2, 3, 4 attempts at 268 MBTU, and sure enough, couldn't get past that, and then they took it down again today. So it looks like we're going to be range trading for the foreseeable future in nat gas. But again, nat gas with 2 to 250 or even 2 to 3 is pretty good if you can again catch some of these moves in the extremes on these. You got to catch them on the extremes. You can't trade in the middle part of these ranges, as you know, because you get kind of whipsawed all over the place. A lot of action in the grains, by the way. We did have a pause here against all the rallies that I talked about this on Friday. We had some big rallies in corn, in wheat, and in soybeans. Looks like today was a consolidation day of those moves. It's going to be interesting to see if we can continue the rally in all three of these grain markets. I did have a short in corn at 649, but it doesn't look that great right now. We actually canceled that. We're going to look to see if we can get a pullback, and I'm also focused on the soybeans. See if they can get up above 15, around the 1525. There's a good resistance level up there that may be worth taking a shot. Looks like these, especially soybeans tend to go up to these resistance levels and work pretty good. These extremes again is usually where you get the best outcome and not get chopped up all over the place or getting, bumped out of some of these trades. So, yeah, other than that, really, VIX again closed below 14 again today, even in the midst of the market selling off, which is really interesting. As I always talk about the VIX, that again is not necessarily a sell signal, but there will come a point. I mean, that we will get an increase in volatility. What is going to cause that? I have no idea. Some exogenous event. Maybe the Fed, maybe interest rates, maybe some geopolitical stuff. There's a bunch of stuff percolating again with what's going on with. I think there was mention of some nukes in Russia in the what was that? Some part in Russia that they're that kind of thing, or maybe China and Taiwan, all kind of stuff going on. The Middle East, as something can happen there. So who knows what's going to cause any kind of volatility? It could just be, something here. Maybe another bank fails or something. I don't know. But you never know. It always comes after the fact, and it comes out of the blue and surprises everybody. I think that's kind of where we're at right now. But we'll see. Generally speaking, again, options have been the best play. Futures, as you know, I mean, just go through every single market every day, unless you are, again, super nimble and are extracting a few points here and there out of the averages. It's been largely lots of chop. If you can do that, again, good on you. You're a way better trader than I am. But we know how that pans out over the long term. So, yeah, that pretty much sums it up, everybody. Again, let's see what happens tomorrow with Powell and see if that impacts the market. Yeah, I'm kind of focused more on some swing trades right now because, again, shorter term has been a bit of a challenge. So just to close things out, everybody, again, if you're interested in maybe looking at that class I have coming up on Thursday. I have an ongoing class in the options. I'm actually going to be doing that tonight. If you're interested in something like that, this is, again, long-term nest egg, 401k, retirement money, that type of thing, which is clearly the most important assets that you might have other than your house or if you own various homes. Those are the best investments. But long-term, you've got to protect that nest eggs, especially if you are getting into the market to retire, or you have a 401k. That is something that I will be covering to help you protect that, grow that, and so forth. Okay. All right, everybody. I think that's going to do it. If you again, you've got the links below. You can contact me at support@transparenttrading-solutions.com. I will have another futures kind of free class. I think probably the week after next. So if you're interested in that, if you want to spend a few days free in the morning with me, I do give you guys a bunch of levels. Not a lot of them are official, but I have people coming in just taking the levels that I put out. That also is available to you if you're interested in that. Other than that, have a great rest of your week. I will see you on Friday. Take care.